Hello, everybody, and welcome. I'm here with Gerald Bilker, and he is my new best friend because he's teaching me all of this stuff that I think is absolutely necessary for you to know. I'm kind of surprised that I've been ignorant to some of the information myself. Over the last 10 years, I've been helping people buy and sell homes, and I didn't necessarily know this information that we're going to share with you today. So, better late than never. So, Gerald, let's talk about mortgage insurance and what it means and what is it. And yeah.
Yeah, absolutely. I appreciate your time. I'm grateful for this opportunity to share. And truthfully, I think one of the biggest things that I like to talk about mortgage insurance first is there's sometimes some confusion between mortgage life insurance and then mortgage default insurance. And mortgage default insurance, commonly known as CMHC, is if we don't have 20% down, then we have to pay that. And that's not there to protect our family, it's there to protect the lender. But that's not what we're talking about today. We're talking the mortgage life insurance side, but I always like to explain that because, especially as a first-time home buyer, the mortgage default insurance is mandatory. Mortgage life insurance is not. And I know, it's very often brought up when people are going through the mortgage documents, and probably 2/3 of the way in, you're asked, "Hey, if something were to happen to you, would you want your mortgage paid for?" And I mean, if you think of the typical person that might be getting a mortgage, they have a family, they have a spouse, financial responsibility. They're probably going to say, "Yeah, I would like my mortgage paid for." And so then the banker or the mortgage lender then bring up, "Well, you know what? You should get this mortgage life insurance." And so that's where generally insurance in general, it's just like, "Hey, this is to cover my mortgage if something were to happen." And they're not wrong, but there's better ways to do it. And I personally believe, because they're never really diving into and explaining how mortgage life insurance works. And that's where I just think financial education is everything. You need to understand how these things work. And the crazy thing is everybody we know and don't know deals with this stuff. And most people have zero idea. They're just trusting the financial professional they're working with. And so mortgage life insurance, how it works is you're paying a premium for the bank to own the policy, and they're also the beneficiary. And so they control it. They get the money if you were to pass away, and they own it. And all we do is make the premium payments for them. And during the same time as your mortgage balance is decreasing, let's say I'm paying $100 a month for mortgage life insurance, and I have a $2,000 a month mortgage payment. My mortgage is initially $500,000. Well, I know there's interest involved, but now it's $498, $496, so on and so forth. So the idea is that my $100, it's not changing, but my mortgage insurance coverage is decreasing because my mortgage balance is decreasing, which again, we're just paying for a product that's losing its value. Truthfully, to get the most bang for our buck, we need to die in the first month that we have mortgage life insurance. And especially after, right. It's crazy. And that's probably one of the biggest things, again, is that if we were to pass away, the money goes to the bank, but only after the post claim underwriting is done. So when someone gets mortgage life insurance, when they're going through the application and they're signing to say, "Yes, I want this mortgage life insurance to protect my mortgage," what happens is they do all of the underwriting after the fact. So if we take a step back, and maybe I'm in my 20s and 30s and 40s and I'm younger and healthier than maybe when I'm in my 50s and 60s and I pass away, I could potentially be getting nothing because my health has changed. I'm older now. And so I think those pieces of information are so important for people to know and understand. In addition to, as you refinance your mortgage, guess what is also going up? Your mortgage life insurance premiums, because now you're older, and life insurance in general, the older you get, the more expensive it becomes. So I think those basic things about how mortgage life insurance works need to be talked about. But unfortunately, I know financial services is generally very transactional. And so people are in and out signing something, and it's like, what did I just sign? What am I doing? But that's seen as normal. So that's I
can't even explain the amount of times I'm, sitting with people who are listing their home or who are buying a home. And of course, it's wonderful that they have full trust in me and I would never steer them in, the wrong direction. But even myself, I am this personality where I put full trust in you and I'm like, show me where I need to sign. I do not need to read the fine print. You've explained this well enough. I trust you, and sign away, right? So I think people, and I even had an experience, I've told you, Gerald, already, that on my, I don't know if it was this house or our last house, but anyways, I was very clear. I was like, we do not need the mortgage insurance. Signed the papers. She never took it out of the papers. So we did have mortgage insurance. And I was like, what is going on here? I think luckily we were able to cancel it, but I can imagine there are several hundreds, maybe thousands of people that, well, I'm sure there's thousands of people that have mortgages where they could potentially be paying hundreds of dollars in this default insurance. Is it default insurance or is it mortgage life insurance?
Yeah.
And that's the thing, like they have no idea. So if there's a homeowner right now listening in, how do they check to see if they are paying this mortgage life insurance?
Yeah. So if you're currently a homeowner, I mean, if you have your mortgage at the bank, you probably could just log on to your online banking. You could pull up your mortgage kind of account information. It should show there. I know you can also see an electronic statement that it'll show you. Mortgage life insurance premiums are generally made within your mortgage payment. So if you pay weekly, biweekly, monthly, it's going to be in there generally. And so as a result, half the time people say, well, Gerald, I'm good. I'm not paying for it. Well, let's look inside of that mortgage payment and see. And then they're surprised to find out, oh my goodness, I didn't know I'm paying $100 or $200 or $300 a month for mortgage insurance. And it's like clockwork, truthfully. But if somebody's about to go or going through the home buying process, I generally just tell them on the front end, when you're going to meet with a mortgage agent or a bank employee or whatever the case is, just make it straight and honest. I'm good. I don't need mortgage life insurance. I have my own policy, and just get it out there up front. So then they're not trying to either bring it up on the back end or they don't even need to put it in there altogether. So, but yeah, exactly. Or if, yeah, so.
So let's back up just a little bit in regards to the CMHC insurance. So that is mandatory for anybody who is putting less than 20% down. So essentially you do not have a choice with this.
Correct.
Now, do the banks still try and sell you insurance even though you're CMHC at that point, or no?
So so you can have both. And that's where sometimes, there's rules against tied selling. I mean, I've heard people tell me that, oh, my bank employee or this individual told me I had to get mortgage life insurance or I can't get a mortgage, which is just, it's not true. But with the CMHC, that is basically, and I'm looking it up here quickly because I don't know the numbers off the top of my head, but it's a percentage of your down or a percentage of the amount of your down payment. So if I have just 5%, then basically I'm paying whatever that percentage is times my mortgage balance gets added to my mortgage balance in mortgage default insurance. And so the larger down payment I have, the smaller percentage that becomes. But that is, like you said, mandatory, but sometimes it's almost used, that confusion is used against us, because when people say, oh, I know I have to get mortgage insurance. Okay, no problem. Here's where you sign for it. And it's obviously not right, but yeah, so you can have both. Absolutely.
But it's not necessary.
Not necessary. No.
So if you were giving somebody advice, then they're saying, okay, Gerald, well, since I'm not going to be covered with mortgage life insurance, how is my mortgage going to be covered then if something does happen to me?
Love that question. So that is where basic term life insurance comes in, and you literally cannot go find a financial read anywhere that says anything but just buying cheap term insurance, and that's it. You don't need whole life or cash value or universal life. buy cheap term life insurance and invest the difference in your investment accounts, and you're going to be good. But I always recommend, so how term works is you're paying a premium just like you would for mortgage insurance for a set amount of coverage. But the difference is, let's say I'm paying $50 a month for 500,000 of coverage. You can purchase different term lengths of term insurance. And this is where sometimes when people tell me, oh, Gerald, I'm good, I have term. And I say, great, but what length of term do you own? And often I find people own a 10 or a 15 or a 20-year term, which for most people, that's inappropriate. It's not long enough because unfortunately, when you have a 10 or a 20-year term and you have an insurance need for 30 or 35 years, guess what's going to have to happen? When that 10 or 20-year term comes up for renewal, if I'm paying $50 a month, my premium of 50 is going to jump to $200 or $300 a month at that end of that term. And so now I'm stuck paying more money. And so that's where I always recommend, at the very least, if you're getting term insurance to cover your mortgage, get the appropriate length that at least matches your mortgage amortization. So you don't have to go through any crazy renewals. If you're young, you should be looking at a 30 or a 35-year term at minimum to get you to retirement age, where at that point, your mortgage is generally paid. You have a lot of money saved at that point. Your kids that are no longer generally financially dependent on you, and your debts are paid. You're in a totally different financial position. You probably don't even need life insurance anymore. So you could just cancel it, and you have now assets. You have your equity in your home, your investments, and you're generally good to go at that point. So,
right, which is what we just did. Personally, I just sort of reconstructed and reconfigured my life insurance system, and you set me up on a 35-year term with my children as riders, instead of them having their own whole life and their own critical illness, which was costing in excess of like $200 extra a month just for the kids alone. And I think what we ended up paying, I think $13 for both kids a month. It just blows my mind that people are just not educated. But the thing is if they have the trust in the professional that they're sitting across the table from, no different. Which is why I believe in always continuing to evolve with your education and to continue. I mean, we just set these life insurance policies up 3 or 4 years ago, and here I am re-looking and re-educating myself and going, holy cow, like, I'm glad I caught this now and I didn't catch this 25 years from now, because I would be very upset. And you also sat across the table from my father and shed some light on the policies he's been paying on for the last 35 years. And to me, it's mind-blowing that people have been taken advantage of, or these sales people think it's more important to make sure that they get paid as to looking out for their client for their future, as opposed to just, this is another transaction and I'll move on after this and go on to my next victim, is how I see it now. So it's crazy to me. And like, why would you need mortgage insurance if you don't have a mortgage, or life insurance, or if you didn't have a mortgage and that kind of thing, right? And so, I mean, obviously there's other things that you can, so I guess we'll go back there for a second. So when you have term insurance and you have $500,000 of coverage, that money does not just have to go to your mortgage. It can be dispersed through your liabilities, essentially.
Yeah, absolutely. And I'm glad you brought that up. And that's the difference between mortgage life insurance, where let's say I did pass the post-claim underwriting and it did pay out. Let's say I initially had a 500,000 mortgage, but now my mortgage is 250. Only 250 is getting paid. But with term, your cost and your coverage is level for that entire length of term. So naturally, if let's say I have a $300,000 mortgage and I have 500,000 worth of coverage, fast forward, let's say 20 years and I pass away, and let's say my mortgage is now 50,000, I'm not just getting 50,000 paid out. I'm still getting 500,000, where that also goes to my family. With term insurance, you get to choose who your beneficiary is. It's not the bank. It's not attached to your mortgage. It's kind of your own policy that can cover any financial liability or responsibility that you have. And so some cases, what I've seen is individuals are like, yep, this is to cover my mortgage. Sometimes people say, hey, you know what? Well, complete transparency. My wife and I, when we initially bought our home, I wanted 800 grand of coverage. We had a $300,000 mortgage. I knew, okay, our mortgage would be paid, and I want 500 grand left over to invest to give her $1,000 a week for 15 to 20 years to raise our family if something were to happen unexpectedly. And so you just have control now at that point, because even if mortgage insurance pays out, great, but you still have other things going on. One of the biggest things is the replacement income, because unfortunately, when someone passes away, not only did you lose your loved one, you lost their income as well. So if you and your family are used to living at X amount of dollars of monthly income, and now your loved one passed away,
And they were the
again, now,
breadwinner.
right, picture their income gone. Like, that's devastating. And I understand, I hear it all the time. Well, I'll just sell my house, or I'll do this. But why would you do that? Like, especially in times when financially tough times, why wouldn't you just pay a little bit of money and get it covered? And if something were to happen, your family's okay. And that's the biggest thing.
And that's the thing with the mortgage life insurance, the bank owns that policy. Like you could pay into it forever and a day, and still at the end of the day, you get nothing.
Right.
Like you get your mortgage paid off, but you get
Right.
nothing in addition to, or whatever, right?
Right. And mortgage life insurance too is generally, if specifically with banks, like if I got my mortgage at ABC Bank, and then let's say a DEF Bank had a better rate, and I went there for my next mortgage, I can't carry that mortgage life insurance over. Now I'm 3 or 4 or 5, 10 years older, not reapply, but now I'm paying a higher rate kind of thing. So yeah, it just, again, I personally believe when people understand the differences, it's a no-brainer. And over the long term is going to cost you a lot less money as well. I've seen cases where people were paying 20, 30, 40 bucks initially. Fast forward 20 years, they were paying their mortgage weekly, and now they're paying 150 bucks a week in their mortgage, in mortgage life insurance premiums. And they're like, what is going on here? And I'm like, that's, again, financial education. It needs to be shared and talked about.
Yeah,
so
absolutely.
crazy.
And it's so important. And I can't believe I went a decade without being thoroughly educated on this, because I can at least put the bug in my client's ear and say, make sure you do your homework and make sure you do not, get led to believe things that are not maybe the best for you.
Well, I appreciate you sharing that, because I think the longer that I'm working in this industry too, I think especially as different industries working together, you see it so often where people just refer people, and it's like, do you even know what we're referring? Like, do you know what, like, at the end of the day, they're actually doing? Like, and I know when I'm working with my clients and people in our business, I want to be referring people to great people in other industries that have great client service that I know is doing what's best for my clients. And that's, it's just so important to me that people just get the education and knowledge that they need. And at the end of the day, if they feel doing something else is better for them and their family, amazing. But now you have the pieces of information that you need to make an educated decision.
Absolutely. And that's so important. So I know we'll have lots more topics to talk about in the near future. But this one was a bit of a thorn in my side that I felt needed to be addressed right away. So I appreciate you hopping on with me and chatting about this. I will be shouting this from the rooftops, making sure everybody listens in on this, because it is so important that people are making educated decisions about this. We are out to help you. We want the best for you. We are not the type of professionals here that want to line our pockets with your money. We actually care about you and your financial future and want to make sure that you're taken care of. So if you guys need anything at all, Gerald, myself are always available to answer any questions whatsoever that you might have.
100%. And that kind of topic of earnings, and it's so true, especially in the insurance industry. I know this is going to be topics for another day. Term insurance is one of the least commission products out there, which is why you see so often in this industry that most people don't even talk about it or educate on it, because it just doesn't pay them as much as other products out there. So again, don't take our word for it. You could do your research. You could read a personal financial book, but it'll echo every single thing that we talk about.
Awesome. Thanks, Gerald. I appreciate your time.
No problem. Thank you.